welcome along to the fifth and final video in our series Finance Innovation Insights, powered by Brightstar Financial. And for this last video we are going to be talking about second charge mortgages, and I'm joined by Darren Perry, Head of Second Charges here at Brightstar. Darren, second charges, great tool in the property investors toolbox. I don't think we talk about them enough.
Absolutely, I would agree. We're finding lots and lots of people now, they're waking up to the use of second charges.
Mm-hmm.
Our brokers that we work with, clients that we deal with directly.
Mm-hmm.
The market's becoming more and more difficult on the first charge side of things.
Yep.
So, with the introduction of regulation to second charges, people not only see second charges as a viable option,
mm-hmm.
they feel more comfortable using them because
mm-hmm.
of the regulator sitting behind the process that we all have to follow.
Indeed. So let's just explain in wax crayon what a second charge is.
Okay, I can definitely do that part. Second charge, essentially, it's another mortgage that sits behind an existing mortgage that someone holds.
Mm-hmm.
We find a lot of people that use them, they may be locked in, or feel they're locked into their current
mm-hmm.
mortgage, or they don't want to disturb the existing mortgage. So
mm-hmm.
what they essentially do is they will approach a second charge mortgage lender so that they can borrow further funds for any legal purpose really, and
mm-hmm.
they'll look to tack that behind the existing mortgage without having to disturb that.
Mm-hmm.
It gives them the ability to raise the funds they do need, usually a lot quicker than they can through conventional remortgage sources,
mm-hmm.
and hopefully do it in a more cost-effective way.
Are there any kind of minimum or maximum amounts that you can raise through a second charge?
Well, we do have lenders that say they'll lend as little as £1,000, but to be honest, there's other opportunities, and that's something we would discuss with somebody if we were arranging that ourselves, that there might be more sensible and more cost-effective alternatives for raising the smaller amounts of money.
Mm-hmm.
We would generally say for anyone looking to maybe borrow an amount that they couldn't secure by unsecured credit facility,
mm-hmm.
it's certainly worth considering a second charge, and certainly worth considering a second charge where the payments need to be structured over a longer term.
Indeed, and they have to obviously have sufficient equity in their property in order to be able to take on a second charge.
Yes, yeah, equity is key, as is affordability.
Of course.
But there are many lenders out there. Some lenders will stop at, say, for example, 75% of the value of a property overall.
Mm-hmm.
But there are lenders out there that will consider lending all the way up to 100%. Now, obviously, the higher you go,
risky. Yep.
the more risky lending it is. Obviously, second charge for any lender is a higher risk because essentially they rank second in order of priority behind the first charge lender.
Mm-hmm.
So that's the risk straight away. But the higher the loan to value, the greater the risk, and they will reflect that in the rates.
Of course. So to be used prudently is what we're going to say.
Absolutely.
Now, there's lots of reasons that landlords want to raise capital,
Yes.
and you've come up with a list, and top of the list actually, tax liability. What other things can landlords use the second charge to raise money?
They could use it to grow their portfolio.
Mm-hmm.
We do find a number of landlords that maybe need to keep the properties up to scratch, keep them up to standard, so they'll maybe borrow the money so that they can carry out the renovation work they require, so they can continue to maximise the rental income they'll receive.
Mm-hmm.
Some landlords just like to use their property portfolio to improve their own homes.
Mm-hmm.
So it may well be the way they look at that is someone else is covering the cost of the mortgage on that property. I can tack the additional funds on to do my own home,
mm-hmm.
and thereby someone else can continue to pay for that for me.
Mm-hmm. And debt consolidation, I guess, as well.
Yes.
You've got very expensive credit card debt.
Absolutely. It's quite a big thing for us at the moment. More and more first charge lenders, they're refusing to lend money for debt consolidation purposes, or they're making it rather difficult to raise the funds for debt consolidation purposes, whereby even if you are clearing the debts, they will factor those debts into affordability calculations moving forward.
Mm-hmm.
Credit cards are a great example because even though you pay them off, there is the temptation, as many people find, to continue spending on them after and run the debt straight back up.
Mm-hmm.
So obviously that will affect future affordability. But the second charge piece is very helpful for people to look at using second charges for debt consolidation, because it is a more standardised model. It is a case, if you're clearing it, we will forget about it. But what the lenders will do, in line with the regulators' requirements, is if someone is clearing debts, they will insist on either clearing them direct through bank transfer, or they will make cheques payable to each of those companies to ensure they are cleared, that somebody doesn't just simply get the money and have a fantastic spend up.
Well, it's good to hear that lenders are being more prudent in that respect. And who can apply for a second charge mortgage? Is it open to everybody?
Yeah, absolutely. Any homeowner with a first charge in place. Believe it or not, there are many mistakes made where we have people asking for second charges where there's no first charge. But it does need a main mortgage to be in place to raise a second charge. But we can secure against owner-occupied residential property. We've already touched on the fact that property landlords could look to use this, so individual buy-to-let properties. We can even secure against portfolios. So it's one of those situations where if you are a property owner and you have equity, we can certainly look to do something to help. The ways really people need to look at it for your landlords, we need to ensure that the relevant rental cover is there. More and more landlords know the problems in securing funds because of the recent regulatory changes. Anyone securing against their residential property is going to need to be able to evidence sufficient personal income to be able to cover the first charge payment, second charge payments, any credit that's in place that will remain, and also their day-to-day living costs in living in that property.
Of course, understandable. Now, we mentioned just earlier about this concept of using a second charge mortgage to raise coverage for a tax bill. Could you give me a reason why somebody might choose to do that?
Yeah, well, you've already mentioned that already. You know, the changes to taxation law around buy-to-let properties are they're a key reason why we see many landlords coming to us end of this month. Tax returns have got to be submitted.
A few nasty shocks.
Absolutely. I think there's going to be a fair few nasty shocks, because this is the first tranche of tax returns whereby the rents received, it just can't all be written off.
Well, we've caused this series Finance Innovation Insights. We've reached the end now of our 5 videos. Thank you very much to Darren for joining me, and thank you also to Bright Star Financial for hosting these interviews. I've learnt so much just talking to you alone, and we've had a really great video series, so many thanks to Bright Star for powering these videos. And if you've been watching them, we do hope you've got value from them. If you are watching on YouTube, please pop along to propertytribes.com. That is where our discussions are hosted. If you've got any questions around these videos, or you want to learn more about these products or second charge mortgages, then please go along to propertytribes.com and we'll be able to get answers for you there. So thanks very much.
Thank you.
It's been a great series. Hope you've enjoyed it.